Welcome to Aha Math and Science. In today's video, I'd like to actually discuss the price action of Apple and what that price action could mean for the broad market. So as some of you guys probably know that Apple has been making new all-time highs every day in the recent times, and today it actually become the first company with a market cap that is more than $3 trillion. Wow. That's really kind of like, totally kind of surprising because, beginning of this year, it's still like, people are wondering if the stock price will go even lower. Now it become the first public company with a market cap that is more than $3 trillion. So it just came out of this bear market. So in this video, we like to actually examine what actually and how the Apple kind of stocks fared in each bear market, besides this current bear market, and then what it could mean, for the broad market. And the results we actually found could be quite surprising. Okay, let's get started. So this is a list of the largest 10 public companies. As you can see, Apple just become the first company with a market cap that is more than $3 trillion. Today it closed at 193.97. And then the two other companies with a market cap that is more than $2 trillion, and then three more companies with a market cap more than $1 trillion. Of particular note, as you can see, other than Saudi Aramco and then Berkshire Hathaway, all other 8 companies are actually associated with technology. And even Berkshire Hathaway is actually indirectly associated with Apple because the stock portfolio, of Berkshire Hathaway has actually quite a heavy weight in Apple stocks. So really kind of interesting to note. So this is the weekly chart of Apple. As you can see, for a year, it was in this bear market. And even the beginning of this year, everybody is really kind of pessimistic, including myself, I wonder like which direction Apple will go. But recently I pointed out that somewhere around here, I said that Apple is about to kind of break out to the high and possibly get to the $200 per share level. Now today is actually at 193.97. It's only $6 away from 200. We think it's going to get to the 200 pretty soon. But then what next? And what it could mean the stock price of Apple for the broad market. As you can see, Apple already made this all-time high, so exceeding the high that pre the bear market. However, the broad market has not. So broad market is still quite it's still lower than the previous high. It has not made the all-time high. And since Apple has the largest, really the largest public company, and also has a very heavy weight in SP 500. So understand how Apple performs will definitely give us some implication regarding how the broad market will perform. So pre this bear market, this is the highest daily close that Apple had in January of 2022. And then in January of 2023, almost exactly 1 year later, Apple had the lowest daily close of 125.02. That's a low in this bear market. And then from here to here, it marched high, essentially non-stop, except there's a small correction at here. And then this is just like one red bar, on the weekly chart. So the pre-bear market peak is 182.01. So from this chart to this peak, the current peak is about $68.95. So we want to express this basically amplitude from the low to the high as a percentage of the pre-bear market peak. So if we do that, we find this percentage is 38%. So the chart to peak value expressed as a percentage of the pre-bear market peak. That's the percentage we get, 38%. And then we want to ask, is this really kind of too high? Or maybe this percentage is too high. Therefore, Apple is about to correct. That's the question we want to try to address. And we want to look at the history, and then from the history, maybe we can get some clues. And since Apple is just coming out of this bear market, so in this video, we're going to focus on how exactly Apple performed in each of the past bear market since Apple becomes the first become the public company. So there are only 4 bear markets: 2020 bear market, 2008 bear market, and then the 2000 bear market. That's basically the burst of dot-com bubble. And then another one, that's a 1987 bear market. There are only 4 of these bear markets. So this one is the 2020 bear market. As you can see, by sometime in the middle of I guess May and June, you can see Apple already made an all-time high. It recovered all the losses. However, the broad market has not. So by May and June, so Apple leads the broad market. So the pre-bear market peak is 81.80, and then the lowest close in this bear market is daily close is 56.09, and then you can see pretty much non-stop. There's a little correction here only on 1 week. Then basically here is like a 2-week correction. So really the major correction only happens here, and when that happens, the broad market also had a major correction. So we're going to mark this as kind of the daily close peak before a major correction. That's a 134.18. So now we can actually also do write down the pre-bear market peak and also the amplitude from the chart to this peak. That's $78.09. As a percentage, actually this is $78 is actually 95% of the pre-bear market peak. So therefore, for the current bear market, the 2022-2023 bear market, we only have this percentage for Apple that has only recovered 38%. And this is something you kind of think about. So what about the next bear market? That's the 2008 bear market. That's also a pretty bad bear market. As you can see, the pre-bear market peak for Apple is $7.14, and then it went down, and this is the low it had, which is in early 2009, $2.79, and then it recovered, and it already recovered somewhere in like October of 2009. However, the broad market is very low compared to the peak pre the bear market. So Apple leads the broad market again. And then you can see that this is a small correction, but really the big correction is coming from here. And when that happens, the broad market also had a bigger correction. So therefore, this we think it's a reasonable to call. This is the high before a major correction, $9.67. So as a result, we can see that the summary is pre-bear market peak $7.14. The amplitude from the chart to peak, that's from 2.79 to 9.67. That amplitude is now 6.88. As a percentage, this 6.88 divided by the 7.14, that is a 96%. Again, it's in the 90% range, similar to the 2020 bear market. Now we look at the next bear market. That's the 2000 bear market. That's a very bad one, because a lot of stocks lost a value more than 90%. Some stocks just kind of no longer exist. So as you can see, that Apple had the highest daily close before the bear market at 1.29, and then it went down, and then right at here, that's when Apple had the lowest daily close of 0.23, and then started to recover, and still Apple recovered somewhere around here. So around beginning of 2005. And that at that point, the broad market has not recovered yet. Again, Apple leads the broad market. But this is a very small correction. So I think that more reasonably say that this is the major correction, the first major correction for Apple after this recovery. So that high is 1.61. So therefore, pre-bear market peak is 1.29. The chart to peak is 1.38. That's 1.61 minus 0.23. That's where we get this 1.38. So this 1.38 as a percentage of the 1.29 is actually 107%. So you can see that this increase is actually even more than the pre-bear market peak. But again, it's close to like 90%. So you can see this percentage ratio is very, very consistent. So now the last bear market, which is just after a few years after Apple, went public, it's the 1987 and the 1988 bear market. As you can in this bear market, Apple actually had a few years of try to recover. And it's kind of interesting to note that at that point, Apple is not a well-known company. So the broad market already covered sometime in 1989, but Apple has not recovered yet. It's still lower compared to the high here. But the broad market already is exceeding the previous high. So at that time, Apple is not a leading the broad market. Nevertheless, it's still interesting to note the numbers. So the highest close before the bear market is 0.53, and then the lowest close during this big bear market for Apple is 0.22. But then you can see it had a very sharp rally, very fierce rally, and it just kind of non-stop before a major correction happens. That happens at here. So the high is 0.65. So now we can write down numbers. The pre-bear market peak is 0.53, and the trial to peak is 0.43. In terms of percentage, 0.43 divided by 0.53, that's 81%. It's still a very high number. So 81%. So you can see this is really a summary of what we had for these 4 bear markets. Pre-bear market peak for the Apple price. This is the amplitude from the trial to peak. And this ratio of this amplitude divided by the pre-market peak is what really interesting, because this number is so consistent. This is like, ranges from 80 to 90. So it was the average value of 95%. The lowest is 81%. So this is some number that we want to keep in mind. Now come back to the current market. So Apple had the highest close before the bear market is 182.01. Currently from here to here, that chart to peak as a percentage of the pre-bear market high is only 38%. So we think that it's not time yet for the Apple to have a correction. It should run much higher. Now, we cannot exclude it may become weak or consolidate for like 1 or 2 weeks. That's fine. That's not a major correction. A major correction, it has to be like really sharply done. So the statistic says the pre-bear market peak is 182.01. What if we assume the chart to peak is 115? That's going to put the price, which is at 115 to the 125, it's going to put the price at 240. Even that, if you have a chart to peak of 115, as a percentage of the 182, that's only 63%. That's still kind of low compared to the historical data. What if actually, let's assume the chart to peak is 160. So now we run some sort of distance, but there's still some distance to run because the chart to peak is 160. That's going to put the price of Apple at 125 plus 160, 285. Even that, this chart to peak amplitude as a percentage of the pre-bear market is only 88%. It's still reasonable because remember this percentage from the prior 4 bear markets averages around 95%. So even a price of 240 is really modest, and 285 is not really crazy. It could still happen based on the historical data. So this is what I want to share with you guys. I think in investment and trading, and sometimes we become biased because the Apple just had a big bear market, and then we thought like, okay, it cannot go that high. It has to correct, and then to kind of like we try to find things to kind of justify that. And this is actually really kind of something that we need to avoid. The thinking we need to avoid. We have to really have an open-minded and really kind of find the information from what the market is telling us, instead of actually try to have a fixed thinking and try to find reason to justify our own thinking. So I hope you have enjoyed this video and find the information presented here interesting. Again, your support means a lot to this channel, to me, so that I can have the motivation to continue making interesting videos to share with you guys my analysis. And so please make sure to click the like button and also to subscribe to our channel if you have not done that. And thanks a lot for your watching.